Okay, welcome everyone. We'll start our lesson 3. Today lesson we will go through LO3 learning outcome 3, which is about explain the use of planning tools used in management accounting. My name is Anjum Sattar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email on my email address. So today lesson, just think about what we know already about budget and budgetary control and budgeting method or the planning methods in within the management accounts. Yes. So always need to be think about. So planning tool, management accounting is a key element of management. Management is all about where we are now and where we want to see ourselves in future. So we need to be yourself in the future. So that's our in future. So that's we need to be look around. So management is the process is the process of designing an environment to achieve the to achieve the pre-selected objective. So whatever objective we have to achieve. So we have to plan for it. So that's the all about the management. So management identification, generation, presentation, interpretation, and the use of relevant help managers their organization, such as involve application of accounting, financial management to create, protect, preserve, and increase the value of the stakeholders. So planning involves establishing the objective of organization, formulating the relevant strategy that can be used to achieve those objectives. In order to plan help to know what's happened in the past, so the decision about what is to achieve in the future can be made. For example, manager planning for the future sale volume, we can look around the sale volume. He need to know about what sale volume will be in the past. Planning can be short term tactical planning and the long term strategic planning. That's which we can look around. So when we look the budget for, we need to be also budget under the management accounting as well. Very intent to organization, how intent to accomplish. We need plan where the individual plan fit with the organization objective, whether the operation inform plan to be relating the period control. So budgetary control is the device that company use for all purposes. What is the budget? A plan expressed in the money. So budget is a plan for the future in the financial management, in the financial accounting or management accounting. So it is the prepared that the approved prior the budget period. Show the income expenditures, capital employed. Yes. So different techniques we can use. Zero based budgeting, which is we start from every year zero. Yes. So that's we need to be look around. So why consider strategy? When preparing the budget, you should always start with the considering operation, organization, strategy, and objective. Because at the end of the day, whatever our planning is all about to achieve our organization objective. And objective only we can achieve it when we have a good plan. So if there is a no plan, so planning is a set nav. So what is the planning? Planning is a set nav for future. It's guide us. It provide the path. So if there is a no planning, there is a no path. So what budgetary control? Budgetary control is the use of comprehensive system of budgeting to aid management in carrying out the function like planning, coordination, and control. The system division of the organization functional basis, different section known as a budget center, preparing separate budget set as the budgetary center, consolidation of all the functional budget into overall organization objective, and comparison of actual level against the against the performance. Yes, against the target, against the budget. So when you make the budget, always first thing you need to be look around the sales forecast. So budget can be according to the time, according to the function we do planning, according to the flexibility, fixed flex. That's all we need to be. So budget sale forecast come first, then you can make the production budget, cost of production, purchase budget, yes, sale budget, and all the budget we can based on Okay, the type of function: sale budget, production budget, material usage budget, material purchase budget, and labor. These are called functional budget, and the functional area planning, which we can use, for the functional budget. That we need to be. Other subsidiary budget is advertising budget, like in the marketing department, different types of budget. Budget is the financial plan for the future. I guess how much we spend, where we spend, and that's we need to be. So advertising budget can be marketing department budget, HR budget, capital budget, and head office budget. So these are all other subsidiary budget. Okay, master budget is an organization. Master budget is a combined all the functional and subsidiary budget into the document that include as the three main statement: profit and loss budget, balance sheet budget, and the cash budget. That's key thing. So sale budget is the most important budget based on the all other budget built in. The budget is the forecast for the quantity and the value of the sales to be achieved in the period. So production budget involve the planning the level of production which is done into answer the first one. What is to be produced, when to be produced, how much to be produced, where to be produced. That's cost of production budget. The budget is an estimate of the cost of the output planned for the budget period, and may be classified into the material cost budget, and overall budget. So purchase budget, this budget provides the information about the material to be acquired from the market during the period. Okay, personnel budget, the budget gives the estimate the requirement of direct labor essential to meet the production targets. That's a research development budget. Yes, how much we are going to be. Capital is budget is about to buy the capital assets, and we can plan for it. The capital cash budget. These are all the planning which we use under the management accounting. Further, we have different approaches. Balance scorecard. Yes, so we can use it. So definition about. Okay. So welcome. We need to be look around the budget and types of budget. Okay, so welcome. So we need to be think about the budget. Zero-based budget is every time you start from the zero, such as a new business. We don't have a previous year, any forecast. So that is called the zero-based budget. Zero-based budgeting techniques is quite popular and we use in the management accounting because if we look the COVID-19 have disturbed. If we just based our budget based on the last year, maybe that's not meet the needs and the wants and the organization objectives. So we need to be every variable we need to be keep in mind, and we can start from the zero. So the zero based budgeting is not the based on the incremental approach previous figures and not adopted as a base. So zero is taken the base, and as the budget is developed on the basis of likely activities for the future. A unique feature of the zero-based budgeting is that try to help management answer the question. Suppose we have start our business from the scratch. On what activities would we spend out money, and what activities would be we give the highest priority? Yeah, that's we can look around. Responsibility accounting. So responsibility accounting is also budget. We do the planning for it. So purpose of establishing responsibility center, cost center, profit center, investment center, where we calculate all the costs, where we calculate the cost and revenue, the profit center, where we calculate cost, profit, and investment. We calculate, return on our investment. That decision we can. Principle of responsibility as follows: fixation of the target each responsibility. If you've been given the budget, you will be accountable for to achieve the certain objective. If as a manager you're not achieving those objectives, so we're not going to achieve. Okay, any question, anyone, please? Promote forward thinking, identification, short term problems. So budget we need to be think about is a forward thinking. This help motivate managers, provide the basis for the system of control. If there is a no budget, there is a no standard, we can't find the variance. Thus we need to be look around. So the 6 reasons for planning, communication, Motivation, organizing, controlling, and evaluation. That's why we make the budget. Planning, strategic, project planning, capital expenditure, short-term planning, communication. We exchange the facts and figures, and budget also. If you stay within a budget, that's really motivate you. Come on, I achieved this, compared to the last year. Our target within the budget. Any question, please? Any question? If you have, okay, thank you. If you have a question, you can ask, please. Okay, then next reason we're looking organizing, delegating task, role, and responsibility. So we can delegate through the budget as well, how much budget required. When we delegate the responsibility, you should delegate the budget as well. Control is a corrective action against the plan. So what went well, what not went well, what corrective action we can learn from it in future, we can adjust our operation, and that will help to achieve our organization objective. Effective evaluation, comparing the budgetary result against the actual result, and we do the variance, and we can find the causes of variance, like material. So we have material cost variance, have two sub variances, and we do planning why, and our variance should, it can be price variance and the usage variance. So if we'll get low price material, yes, low price material, so what will be happen if we'll buy from, let's say, material buy from China, and let's assume is a low quality material with respect. So if it's a low quality material, so the material can be waste, are required to use more, yes, to make the product. Some material can be damaged. So what we can do now, our price variance can be favorable, yes, usage variance can be adverse, but overall, if cost variance is favorable, yes, like sometimes you buy things from Primark, you're saying it's a £5, but if you buy Marks and Spencer, maybe you're buying £20. You're thinking, come on, it lasts only 1 year, but you think, oh, it is a favorable still, yeah. Even if the time period is less, you can use it. So like if the price variance was, let's say, £15 favorable, yes, and the usage variance was £10 adverse, yes, so overall variance is £5 favorable, yes. So we can, that way we can look around, and we can make the decision. So that's the variance also help, to make the decision under the management account. Okay, types of budget, as we mentioned, the sale budget, and we can prepare then production budget, labor budget, and material usage and material, that's, the periodic and continuous budget, rolling budget, which we can, and budgetary control, which we can use it, and that will help to be achieve all organization objective effectively. That's which we need to be look around. Okay, any question? So I'm going to send you the example of cash budget, so which will go through cash budget. So here is the example of cash budget. So this is the template, and which will go through, and we have a case study as well. So like here, so we've been given the template, we looking, yes, to preparing the budget, and actually question we've been given, we looking the sale forecast, sale budget. That's why it's not opening. Okay, so I'll open this, and it's all been prepared the budget. So we look around the sale, and when we receiving the cash, and we want to be make sure the cash is balance is a positive. If the cash balance is not positive, so we will be out of the cash. So that's So we've been given some here question about the cash budget, how we can create. You will see, yes, like January, February receipts, payments, and that's the way we can do some example there. That can be one, and other than that, we have these, the templates which we already solved. So you will see that that's the template, and then next one is actually solved budget for September, October, and you will see their net balance. What we have here is a negative. So that's, example. We can look around the cash budget. Okay, then we have a case study of a Zurich bank, yes, Zurich company, and the benefit of budgeting. So please, we can read in our own time, which is quite good to read, yes. So this is the we've been given. Yes, so budget, and we need to be read please before next lesson, which we can, and if you not get anything, so we can discuss. As we mentioned, variance is the difference between budgeted and actual figures, like material price variance, yes, material usage variance. So these are the variance will help, the overhead mean not direct, indirect expenses. The variance we can identify. Variance is the difference, what you estimate, what is actual. All the formulas, actual hour, yes, timed by the actual rate, and actual hour timed by the standard rate, and we can standard hours timed by the standard rate. We can find the variance as well, like we've been given here. So labor rate is 4 hours. Standard is to use 4 hours, and the rate is £7. So each unit requires £28 worth of the labor. Yes. So if we are using these hours actually, so you can times by £7, and you can find. And if his actual cost is given, and you can take the difference. Like here, we have some example, and we have a variance here. So rate variance was adverse, and then efficiency variance was favorable because high skilled labor we are hired, and we pay the high rate than our standard, because actually we paid £7.10, but standard was 7, so 10 pence we paid more, because the rate wise we worse off £475. But in terms of when we the efficiency, they give us more productivity. They have used they use actually our 4,750, but they should use 4,000 for 12,000 units. So we have a favorable variance. But if we look, there was the adverse, and this is favorable. Still 100 is we had adverse as a cost variance. We use more. So that's the way we can look around, and we can make the decision either we'll go. So these are all the causes of the variance which we can discuss. And then I included the link for you to do the quiz, please, in your time. So you can copy this link. You can go through the please quiz, and I will also have. Okay, so when we do the variance, always, and we plan things, yes, planning. So always we need to be look around the past. Past is political, economic, social, and technological. We need to look around the SWOT, strength, weaknesses, and opportunity, and we can use the balance scorecard. Balance scorecard is an approach where we can look around the financial perspective, and we can look around customer perspective, we can look around research and development, and we can look around innovation. Yes, and we can different perspective we can look around. If you want to explore further, of course, everything on Moodle as well. Porter 5 forces, we can use the model for planning purposes. Porter customer bargaining power, supplier bargaining power. So these models we can embed it in our writing. So what we can look around, if we so let's say balance scorecard, and we can look around within the Kaplan, because we can find a lot of examples there. So balance scorecard, Kaplan. So Kaplan publisher, of course, published the things. So they had more examples. So that's which we can look around the balance scorecard model, which is we've been given, and this is financial perspective, customer perspective, and we all been have lot of example. That's also we use for the planning purposes, and which we can map with the strategy. So that link will be available for further reading, please. That's which we can do as well. And a lot of website being refer, and the reference is here for further, which we can do for the reading. So we can say extra reading useful link. Okay, that's we can use it. Any question? So if we can look around these, the model, we can further explore it. A balance scorecard. Yes, so that is the balance scorecard, customer perspective. Yes, this one. So balance scorecard, we can look around customer perspective. Yes, so financial perspective, how do we look, our shareholders? Customer perspective, how we look the customer. VNN strategies, internal business processes must be excel, and innovation and learning perspective, can we continue to improve and create value for our customers? CSF is called critical success factor. For the customer, critical success factor is the low cost. So low cost is the critical success. Internal perspective, high quality. Innovation implies satisfaction. Financial perspective, profitability. If we don't have it, we can't really sustain in a business. So that's which we can look around the financial, and these are the different models. So that's model we can use. Some of them we already learn about, yes, before. So that's like also put you here. So this is about the balance scorecard model. So that's which we can look around all different perspective, and we can make that decision accordingly. Okay. Yes, this can be balance scorecard can be linked. So this link will be underneath as well for further reading. Okay. Any question? Yes, please. Any question? Yes or no, please?
No, please, for now.
Okay, so that's all, we'll keep up to here. Today's lesson was all about LO3. These are all the planning tool we discussed, in the management accounting, and that's we need to embed, in our writing, and everything, all the links will be. And the next lesson we'll go through LO4, and then afterwards, the last lesson will be about assignment discussion. So that's all today from my side. If you have any question, those are listening this recording, please drop me email, and I'll try my best to get back to you as soon as possible. Thanks for listening and attending today's session, and have a nice time. Thank you. Bye bye.
Bye bye.